Hi, this is Kerry Artak with Wicked Stocks, bringing you an individual stock pick. This one in Twitter Incorporated, symbol TWTR. I did record this video on Tuesday, April 5th, 2022, the day after it was announced that Elon Musk had acquired over 9% of the company's shares. I'm not going to get into that and what that means because I really don't know. If he knows something we don't, or, that's a whole nother aside you can read on the internet or wherever you may find that information for yourself. These are the fundamentals of Twitter, courtesy Yahoo Finance, as of Tuesday morning, April 5th. And I'm just going to take a look at the charts to see what they're telling me in terms of directional probability over the coming weeks and months. This is the full extent of Twitter in terms of its existence back in 2013, the IPO. And I'm going to zoom in here just a bit to this area to show you that there is, in fact, a descending channel top that, it's over the last year and a half or so, the January 21 high. I believe that was a January 21 high. It could be February. I don't have that in front of me. But in any event, this channel top is really sort of our ceiling through the second quarter. And from here, and I'll show you the exact location here, it's actually 57.34 this week, drops 46 cents a week. So you can monitor, track this resistance through April, through May, into summer trade. It should remain valid as long as we don't fall back and break those lows from a month and a half ago. And so 57.34 can contain buying, I'm going to say, on a monthly, possibly quarterly basis. And from there, we can fall off back into the 30s again over the weeks to follow. And so this is sort of the basic framework that I see. There's a channel top that we settled above 2-3 weeks ago this week at 37.60, dropping 19 cents a week. You could also monitor this because I do think that there is the possibility that holding below 57.34 or once tested, this stock could fall back over the following, as little as 3 to 5 weeks. Could take a couple of months back into, we'll just call it the upper 30s. I don't think there's anything magical about that 37.60 short-term channel top. It's more of a reference point that is kind of a near to mid-term floor of support because it also coincides with the congestive area that played out for a couple of months down in that zone into the lower 30s. So 37.60 is just sort of a basic reference. And one thing you might watch as well is this week's low so far. I mean, we gapped up and over, the last week's highs. We've got a big gap there. The low this week is 46.86. And it's a valuable level to watch for the next week or two. And so there's a couple scenarios here. That the high that we put out this week is good, and we fall off into next week and close next week below 46.86, that would be a sign of weakness. And I would think that 37.60 formation would be likely within probably 2 or 3 weeks at this kind of volatility. There's also the scenario where we push beyond this week's high, we test that 57.34 channel top, and then we fall back by the end of next week to close below 46.86. So for the next week or two, 46.86 will be a pivot point to the downside, that if we settle below it, should then yield that 37.60 area within just a few weeks, 3 to 5 at the very most, where we could bottom out actually on a monthly basis, possibly longer than that. By that point in time, we may take a fresh look at Twitter to see what's going on. The real purpose of this video, though, is just to apprise you of the fact that while Elon did buy a sizable portion of the stock of Twitter, is it going to take off and continue higher, kind of in a perpetual state? And I say not until we close above the 57.34 channel top. Once again, dropping 46 cents a week. You can monitor this all the way through May trade if you want to watch this. Closing above this formation by a 1% margin would then indicate, I think, a longer-term bullish continuation. And in this situation, he's got a good trade on his hands, Elon Musk, because I do think that over the following, I'm going to call this probably a 3 to 5 month move. It could go faster, but I do think that this rising channel top now, 87.24, would represent new all-time highs. It would push beyond last year's highs by just a bit. I'm going to call that a 3 to 5 month target. If we close above 57.34 by the 1% margin right here, 87.24 within 3 to 5 months, And that could be an area, 87.24, that could contain buying at least on a quarterly basis, quite possibly through the balance of the year. On the way up, we do have the 80.75 all-time high that was placed last year, and you can see there's not a big difference between the two. In fact, I kind of like these setups. If we were to push into the 80s, closing above 80.75 would provide sort of another week or two of follow-through buying, for the late crowd. And then 87.24 could then wind up holding a quarterly or even annual high, and then we fall off back below 80.75, and that's all she wrote. The market should then continue south. And at that point in time, of course, you take a fresh look at the charts to see what they're saying in terms of intermediate support on the way down. But way ahead of myself on here. The real purpose of the video is just to apprise you of these numbers. This sort of textbook descending channel top, 57.34, able to contain monthly, if not quarterly, buying pressures. And from here, we can fall back into the low to upper 30s. We'll just call it the 30s as I showed earlier. And inversely, closing above 57.34 by that 1% margin that gives it sort of a technical validity. If we close at 57.60, that would still be by inside that 1% zone, and we could fall off into next week. But closing above 57.34 by the 1% threshold, we have a valid buy signal that should play out through the second quarter, into the third perhaps, over the next 3 to 5 months or so. It could be quicker. Well, you can see that on this chart that we've had moves that have been pretty quick, within 3 to 5 weeks possible. But I doubt that. I think this is a 3 to 5 month rally into the upper 80s if we close this week above 57.34 by a 1% margin. Until then, and here's the last thing I'll say about it, you're approaching a zone of resistance that can contain buying, through the second quarter. And so this is not a bad area to consider buying, say, 35 or 40 puts that don't expire for at least several months. So that you've got a decent theta, or I'm sorry, a delta on the way down. Theta is your time decay element, and you want to avoid that. So I wouldn't buy a 35 put that expires in 2 or 3 weeks. I would pay a little bit more for one that doesn't expire for at least 3 months or so. Anyway, I think that pretty much covers it. There's not much else to say on this particular video on Twitter. I appreciate you following, and this is a free stock pick. This goes out to all of our basic members on wickedstocks.com, and they get a prize of this, the fact that this stock has been posted immediately by email. So that's something you may want to consider becoming a wickedstocks.com basic member. The only thing required is a name and an email address really, so that you're notified when these posts are made. We put out one free one a week that goes to all the basic members and gets posted on YouTube. And then we have 2 additional premium stock picks that are only for premium subscribers. So I might as well mention that there is a package of subscription that will include 2 individual stock picks like this every week. That also includes the weekly Dow Jones Industrial ETF, the DIA, the weekly IWM, the Russell 2000, weekly Bitcoin report, and those 2 stock picks. That's quite a deal for $25 a month. Anyway, that's all I'm going to say. You have a great day, and we'll talk soon.